we shall discuss the next problem. A company expects to have rupees 37,500 cash in hand on 1st April 2008 and requires you prepare an estimate of cash position during the 3 months April, May and June 2008. The following information is supplied to you February, March, April, May and June. Here the information was given for in relating to sales, purchases, wages, factory expenses, office expenses and selling expenses. In the month of February, sales rupees 75,000, purchases 45,000, wages 9,000, factory expenses 7,500, office expenses 6,000, selling expenses 4,500. The month of March, 84,000 is the sales, 48,000 is the purchases, 9,750 is the wages, 8,250 is the factory expenses, 6,000 office expenses and selling expenses is 4,500. The month of April, 90,000 is the sales, purchases is 52,500, wages 10,500, factory expenses 9,000, office expenses 6,000 and selling expenses 5,250. The month of May, sales 1,20,000, purchases 60,000, wages 13,500, factory expenses 11,250, office expenses 6,000 and selling expenses 6,570. Then June, sales 1,35,000, purchases 60,000, wages 14,250, factory expenses 14,000, office expenses 7,000 and selling expenses 7,000. So these are the informations was given here. We have to prepare the cash budget in the month of April, May and June. Here other informations like the period of credit allowed by suppliers 2 months. Next one is 20% of sales is for cash and period of credit allowed to customers for credit is 1 month. Delay in payment of all expenses is 1 month. Plant has been ordered to be received and paid in May. It will cost rupees 1,20,000. Income tax of rupees 57,500 is due to be paid on June 15th. And the company is to pay dividend to shareholders and bonus to workers of rupees 15,000 and 22,500 respectively in the month of April. Okay, here a company expects to have the 1st April 2007 cash in hand. That is the opening balance in the month of 1st April 2008. We have to prepare the cash budget in the month of April, May and June 2008. Here sales, what is the first information? Period of credit allowed by suppliers 2 months. So credit allowed by suppliers 2 months. That means here the purchase is 45,000. This amount is payable in the month of April. Then 20% of sales is for cash and period of credit allowed to customers for credit is 1 month. So 20% of sales is for cash. So here out of 75,000, 20% that amount is paid immediately cash and remaining amount which is considered as credit sales. That amount is paid in the month of next month, that is credit is allowed in 1 month. So this amount is collected in the month of March. Then delay in payment of all expenses 1 month. So all the expenses, wages, factory expenses, office expenses and selling expenses. Here time allowed for 1 month. So, in the month of February 9,000 which is paid only in the month of March. The March 9,750 which is paid in the month of April. April month which is paid in the month of May. Then May 13,500 which is paid in the month of June. The month of June 14,250 which is paid in the month of July. So, 1 month period is allowed here. Plant has been ordered to be received and paid in May, it will cost rupees 1,20,000. That is a payments. Income tax of rupees 57,500 is due to be paid on June 15th. Okay, that is also payments. Then the company is to pay dividend to shareholders and bonus to workers of rupees 15,000 and 22,500 respectively in the month of April. So, which is also considered as payment, dividend paid to shareholders and bonus paid to workers. So, both are comes under payments in the month of April. Okay. So, here informations are given here, the month of February 75,000, here 20% is for cash. So, 20% is for cash, in the sense 75,000 into 20%, we have to calculate 20%, that is paid immediately cash, and remaining is considered as credit. So, the credit is also allowed for 1 month. Okay. Then next one is delay in all payment, that is delay in payment of all expenses. All expenses like that is allowed for 1 month. Then plant has been ordered, that is the payment side. Then income tax is also one of the payment. Then dividend paid and bonus paid, this is also payment. Okay, we shall see the solution of the problem. Cash budget for April 2008 to June 2008. Here we have to prepare the 3 months period, April 2008, May 2008 and June 2008. Here first one is opening balance. Opening balance was given in the month of April 2008, 37,500. A cash sales. So, 20% of sales is cash sales. So, 20% of that amount 18,000. Then opening balance, that is a closing balance in the month of April, which is the opening balance in the month of May, 11,700. Then cash sales rupees 24,000. Then closing balance in the month of May, which is the opening balance in the month of June, 91,050. So, that is the bank overdraft. Then cash sales was given 27,000. Okay, here opening balance was given 37,500. Then 20% of sales is considered as cash sales. Here also closing balance of cash in the month of April, which is the opening balance in the month of May, 11,700. Cash sales 24,000. Then closing balance in the month of May, which is the opening balance in the month of June, 91,050 is the bank overdraft. Then 27,000 is the cash sales. Then remaining 80% is considered as credit sales, which is allowed for 2 months. So, debtors 80%, remaining 80% of previous month sales, rupees 67,200. Then next month 72,000. Then next one 96,000. So, the total receipts for all those things 1,22,700. Here 1,07,700. The last one is 31,950. Okay, the total receipts of this column 1,22,700, then 1,07,700, 31,950. Then next one is payments. Creditors 2 months previous purchases. Here first month 45,000, next 48,000, then 52,500. Then wages that is paid in the next month, following month. So, the previous month is paid the month of next year. So, 9,750, here 10,500, then next one is 13,500. Then factory expenses. So, all the expenses are paid in the following month. So, factory expenses is also The previous month is paid in the next month 8,250. So creditors 2 months previous purchases, wages previous month which is paid in the next month, then factory expenses is also paid in the next month 8,250, office expenses 6,000 which is paid in the next month 6,000, then selling expenses which is also paid in the, that is a previous month which is paid in this month, then dividend to shareholders 15,000 in the month of June, then bonus to workers 22,500. So these are the payments. So the total payment is 1,11,000. The total payment cash rupees 1,11,000. Now we have to deduct the difference between total cash receipts and total payments. Here total cash receipts 1,22,700. 1,22,700 minus 1,11,000. So 1,22,700 minus 1,11,000 is 11,700. So A minus B. Here total receipts 1,22,700. Total payments 1,11,000. So is equal to 11,700. So this closing balance which is the opening balance in the next month. Then the total of this month is 1,07,700. Here the creditors 2 months previous purchases rupees 48,000. Wages the previous month which is paid in that month, next month 10,500. This is also paid in the next month 9,000. Then next office expenses 6,000. Selling expenses 5,250. Then repurchase of plant. Purchase of plant 1,20,000. So the total payments, that is 48,000 plus 10,500 plus 9,000 plus 6,000 plus 5,250 plus 1,20,000. So the total payments like 1,98,750. In this month, total payments is higher than total receipts. Here total payments 1,98,750, but the total receipts is 1,07,700. Okay, now we occur the loss like the company needs bank overdraft facility in the month of May and June. Here 1,98,750 minus 1,07,700, 91,050 rupees. So 91,050 the company needs bank overdraft facility in the month of May and June. So similarly we have to calculate this one. Here creditors 2 months purchases 52,500, then wages 13,500, then factory expenses 11,250, office expenses 6,000, selling expenses 6,570, then income tax 57,500. So the total of all expenses 52,500 plus 13,500 plus 11,250 plus 6,000 plus 6,570 plus 57,500. So the total of all these expenses is 1,47,320. So 1,47,320 minus 31,350. This is a total receipts 31,350. So total receipts 31,350, but the total payments 1,47,320. So total payments is higher than the total receipts. Okay, the total payments is higher than the total receipts. So the company needs overdraft facility in the month of June. So 1,15,370 is the difference between these two. 1,47,320 minus 31,950. 1,15,370. Okay, before preparation of the cash budget, you just know about what are the opening balance, what are the receipts they have. So opening balance, add receipts, then total receipts are here, then minus all payments, all expenses, then purchases, assets purchased. So these are comes under payment side, then total payments. So, total receipts minus total payments, the difference between these two is called closing balance of cash. Okay. The closing balance of this year, which is the opening balance of the next year. Here the 1,15,370 is the closing balance in the month of June. So, that is negative sign. So, the company needs overdraft facility in the month of May and June to the extent of 91,050 in the month of May, in the month of June 1,15,370. So, this is a solution for this problem. Okay, the next one. Now, let us see the next problem. From the following information, prepare cash budget for the month of January to April. Here expected sales and expected purchases was given here. Here expected purchases, expected sales, January 60,000, February 40,000, March 45,000, April 40,000. Expected purchases in the month of January 48,000, February 80,000, March 81,000, April 90,000. Here additional information was given here. Wages to be paid to workers rupees 5,000 each month, balance at the bank on 1st January rupees 8,000. It has been decided by the management that in case of deficit fund within the limit of rupees 10,000, arrangements can be made with bank. In case of deficit fund exceeding rupees 10,000 but within the limits of rupees 42,000, issue of debentures is to be preferred. In case of deficit fund exceeding 42,000, issue of shares is preferred, considering the fact that it is within the limit of authorized share capital. That is, from the following information, prepare cash budget for the month of January to April. So, for the month of January to April, here expected sales was given. The month of January 60,000, February 40,000, March 45,000, April 40,000. Here expected purchases in the month of January 48,000, February 80,000, March 81,000, April 90,000. Here additional information was given here. Wages to be paid to workers rupees 5,000 each month. So, wages to be paid to workers rupees 5,000 each month, balance at the bank on 1st January rupees 8,000. So, opening balance was given, opening balance rupees 8,000. It has been decided by the management. In case of deficit fund, within the limit of rupees 10,000, arrangements can be made with the bank. In case of deficit fund which is exceeding 10,000, so exceeding 10,000 but within the limit of 42,000, within the limit of 42,000 they can issue debentures. In case of deficit fund exceeding 42,000, issue of shares is preferred, considering the fact that it is within the limit of authorized share capital. So, this is a problem here I worked out, that is the solution of the problem. Here there are 4 months are given here, January, February, March, April. So, opening balance, first one results opening balance in the month of January 8,000. So, in the month of January 8,000, February 15,000. Sales amount is 60,000, here 40,000, in the month of January 60,000, in the month of February 40,000, the month of March 45,000, April 40,000. So, next in the month of January, here there is no issue of debentures, issue of shares. So, the total receipt of 8,000 plus 60,000, 68,000. The total payments is purchases 48,000, wages 5,000. So, the total is 53,000. Now, you have to find out the closing cash balances. So, the total receipt 68,000, the payments like 48,000 is the purchases, wages 5,000. So, total payment 53,000. The difference between these two 15,000 is the closing cash balance. That is 68,000 minus 53,000 is the closing balance of cash. So 15,000 is the closing balance in the month of January, which is the opening balance in the month of February. Here sales rupees 40,000. Okay, here sales 40,000. Then total payments like purchases 80,000, wages 5,000. Here the total is 85,000. So 85,000 is the total payment is higher than 55,000. Okay, here 85,000 is the total payment. This total payment is higher than 55,000. 15,000 plus 40,000, 55,000. So if the deficit of above 10,000. So above 10,000 in the sense they are ready to issue debentures. Second option is applicable. So 85,000 minus 55,000 remaining 30,000. So 30,000 they can apply the third option. They can issue debentures. Now you can add 15,000 plus 40,000, 30,000 they can issue debentures 30,000. So the total is 85,000, which is the opening balance in the month of February. Sales was given 40,000. Then expenses payment side, purchases rupees 80,000, wages 5,000. Then closing cash balance. Here there is no closing cash balance because here deficit fund. Here deficit fund rupees 30,000. So the deficit fund amount which is utilized for issue of debentures 30,000. So issue of debentures 30,000. So this should be tallied here. Total payments and cash receipts and payments which should be equal one. Then next one is in the month of March. So in the month of March there is opening balance or there. There is no opening balance because deficit fund which is utilized for issue of debentures rupees 30,000. So here there is no balances here. Then sales rupees 45,000, issue of shares or debentures 86,000 is the total, purchases 81,000, wages 5,000. So the total payments is 86,000. Here the total sales amount 45,000. Here also 86,000 is higher than 45,000. 86,000 is higher than the 45,000. So 86,000 is the payments, but receipts only 45,000. Here also deficit. So we can apply the issue of debentures. Second option is applicable here. If the deficit is more than 10,000, less than 40,000, we have to apply the issue of debentures. 86,000 minus 45,000, 41,000 debentures are issued here. So here there is also no closing balance here. So in the month of April, here there is no balances here. Dash sales rupees 40,000, issue of debentures here there is no debentures issued here. Then less payments or purchases. Here payment rupees 90,000. So purchases rupees 90,000, wages rupees 5,000. The total payments is 95,000. 40,000 is the sales amount. Here there is no issue of debentures. So here also 95,000 is higher than 40,000. 95,000 is higher than 40,000. So here also bank overdraft facility is available. That is 95,000 minus 40,000, 55,000. 90,000, 95,000 plus minus 40,000, 55,000. 55,000 is the third category. They can issue a debentures. Debentures rupees 55,000. Sorry, debentures shares. They can issue shares rupees 55,000. That is 95,000 is the cash payment. Here already cash payments rupees 40,000. So 95,000 minus 40,000, 55,000. Okay. So here also there is no closing balance are there. First, that is January 1st we have closing balance 15,000. that closing balance is carried forward to the next month of February 15,000. Then sales was given here. Then the total amount of opening balance and sales just 55,000, but the amount paid, the payments, the total payment is 85,000. So we have to apply the second option, deficit budget. So 85,000 minus 15,000, 30,000, which is utilized for issue of debentures, 30,000. So 15,000 plus 40,000 plus 30,000, the totally 85,000. So here payment side also 85,000. Here there is no closing balance or there. So in the month of March, here there is no opening balance or there. So sales 45,000. 86, the issue of debentures and shares, 86,000 minus 45,000, 41,000. So 41,000 they can utilize for issue of debentures. Then last one is April, the month of April, and the month of April 40,000 is the sales. Issue of the payment side 90,000, purchases and wages 95,000. So the total cash balance rupees 95,000 minus receipt 90,000. So payment side 90,000 plus wages 5,000, totally 95,000. Then here receipt side sales rupees 40,000. Sales rupees 40,000. So here also deficit fund 95,000 minus 45,000, 40,000, 55,000. So 55,000 is a different fund. Okay. Is it clear? Then next one. Okay, now we discuss about the next problem. A firm expects to have 25,000 in bank on 1st May 2007 and requires it to prepare an estimate of cash position during 3 months, May to July 2007. The following information is supplied to you. The month of March, April, May, June, July. Information was given here: sales, purchases, wages, factory expenses, office expenses and selling expenses. Here sales 50,000 in the month of March, purchases 30,000, wages 6,000, factory expenses 5,000, office expenses 4,000, selling expenses 3,000. In the month of April, cash 56,000, purchases 32,000, wages 6,500, factory expenses 5,500, office expenses 4,000, selling expenses 3,000. The month of May, 60,000 is the sales, 35,000 is the purchases, 7,000 is the wages, factory expenses 6,000, office expenses 4,000, selling expenses 3,500. The month of June, 80,000 is the sales, 40,000 is the purchases, 9,000 is the wages, 7,500 is the factory expenses, 4,000 is the office expenses, 4,500 is the selling expenses. In the month of July, 90,000 is the sales, purchases 40,000, wages 9,500, factory expenses 8,000, office expenses 4,000, selling expenses 4,500. Here other information was given here. 20% of the sale is for cash and remaining amount is collected in the month of in the month following that of sales. Suppliers supply goods at 2 months credit. All expenses are paid in the month following the one in which they are incurred. Income tax rupees 25,000 is payable in July. Plant has been ordered and is expected to be received in June and it will cost rupees 80,000. The company pays dividend to shareholders and bonus to workers of rupees 10,000 and 15,000 respectively in the month of May. So here first information is 20% of sales. 20% of sales is for cash. So here 50,000 is as credit sales. Out of 50,000, 20% is treated as cash sales. and remaining amount is collected in the following month. Remaining amount is collected in the month following, that of sale. So here out of 50,000, 20% is considered as cash sales. Remaining amount which is to be collected in the month of April. The month of April, 56,000 into 20% is treated as cash sales. Then remaining which is to be collected in the month of May. Similarly, in the month of May, 60,000 into 20% which is treated as cash sales. Remaining is treated as credit sales. That amount was collected in the month of June. Then out of 80,000, 20% of sales is considered as cash sales and remaining 80% is considered as credit sales. That amount was collected in the month of July. Okay. In the month of July, 90,000, here 20% of the sales which is considered as cash sales, remaining 80% which is considered as credit sales. That amount is collected in the month of August. Then suppliers supply goods at 2 months credit. Suppliers supply goods at 2 months credit. That means 30,000 is the value of purchases in the month of March, which is payable only in the month of May. 2 months credit, 1, 2. Then in the month of April, purchases value rupees 32,000, which is paid in the month of July, 2 months credit. Okay. Then 35,000 which is paid in the month of July. Then 40,000 which is paid in the month of August. So 2 months credit was allowed here. Then next one, all expenses are paid in the month following the one in which they are incurred. So following month. For example, here wages, all expenses, wages, factory expenses, office expenses and selling expenses, which is paid in the following month. Here wages rupees 6,000 which is paid in the month of April. In the month of April, 6,500 which is paid in the month of May. Rupees 7,000 in the month of May which is paid in the month of June. In June, the month of June, rupees 9,000 wages which is paid in the month of July. So the amount is paid in the following month. Similarly, factory expenses, office expenses and selling expenses. Then next one is income tax is payable in July. So income tax, which is the expenses payment side. Then plant has been ordered and is expected to be received in June and it will cost rupees 80,000. Okay, that is also payments. Then the company pays dividend to shareholders and bonus to workers rupees 10,000 and 15,000 respectively in the month of May. So in the month of May, bonus and dividend to shareholders both are expenses payments that should be considered as payments. So in the payment side, dividend and bonus rupees 10,000 and 15,000 respectively. So this is the explanation of the problem. Now we can do this problem here. Okay. Now let us see the solution of the problem. A cash budget for the month of May 2007 to July 2007. Here opening balance was given in the month of May 2007, 25,000. Then add receipts. Here cash sales 20% of the current month and remaining 80% of the sales which is paid in the next month. Okay. So 20% of sales, here 12,000, remaining 80% which is collected from the next month rupees 44,800. So similarly we can do that other month, June 2007, 20% of the current month which is paid in the month of June immediate cash and other credit sales, 80% of the credit sales which is paid in the month of next month 48,000. Similarly July 2007, 20% of the sales which is immediately paid in cash remaining to 80% of the credit sales which is paid in the month of then following month. So total receipts here 25,000 plus 12,000 plus 44,800, the total receipt is 81,800. So the total receipt of May 2001, 81,800. Then in the month of June, 7,800 is the opening balance, cash sales 16,000, credit sales 48,000. So the total receipt for this month is 7,800 plus 16,000 plus 48,000. So the total is 71,800. Then in the month of July, cash sales rupees 18,000, credit sales rupees 64,000. Then payments. So what are the payments they have? Purchases rupees 30,000. Purchases rupees 30,000, wages 6,500, factory expenses 5,500, office expenses 4,000, selling expenses 3,000, dividend to shareholders 10,000, bonus to workers 15,000. Okay, in the month of May, purchase value is 30,000, wages 6,500, factory expenses 5,500, office expenses 4,000, selling expenses 3,000, dividend to shareholders 10,000 and bonus to workers 15,000. So the total payments in the month of May 2007, 74,000. 74,000 is the total payment. Now you have to calculate the closing balance in the month of May 2007. So 81,800 minus 74,000. So all payments, that is denoted as B, so closing balance is A minus B, that is total receipts minus total payments. So 81,800 minus 74,000, 7,800, that is the closing balance. So this closing balance, May 2007 closing balance, which is the opening balance in the month of June. So in the month of June, 7,800, cash sales 16,000, credit sales 48,000. So the total of all these items, cash receipts 71,800 minus total payments 32,000 plus 7,000 plus 6,000 plus 4,000 plus 3,500 plus 80,000. So the total is 1,32,500. So a closing balance is 1,32,500 minus 71,800 is a 60,700. This is a bank overdraft because the expenses is higher than the receipt. The payments, the total payment is 1,32,500, but the total receipts only we have 71,800. So expenses is higher than the receipts. So the difference between these two, 60,700, is considered as bank overdraft. So this was transferred to the July 2007, which is considered as opening balance. So closing balance in the month of June 2007, which is the opening balance in the month of July 2007, 60,700. Then cash sales 20% of current month, rupees 18,000. Credit sales 80%, 64,000. So the total is here the 18,000 plus 64,000 minus 60,700. So the amount is 21,300. Okay. So the total bank overdraft 60,700. Cash sales 18,000 plus 64,000. So 60,700 minus 18,000 minus 64,000, 21,000 300. So here purchases 35,000, wages 9,000, then factory expenses 7,500, office expenses 4,000, selling expenses 4,500, then income tax 25,000. So purchases 35,000, wages 9,000, factory expenses 7,500, office expenses 4,000, selling expenses 4,500, income tax 25,000. So the total is 85,000. Okay, so 85,000. Here 85,000 minus 21,300, 63,700. Okay, so the total is 85,000 minus total receipts 85,000 minus 21,300. The net balance is 63,700. So this is also expenses higher than the receipts. So payments is higher than the receipt. So this is also bank overdraft. The firm will require overdraft facilities in the month of June and July to the extent of 60,700 and 63,700 respectively. Okay, the firm will require overdraft facilities in the month of June and in the month of July to the extent of 60,700 and 63,700 respectively. Okay. Okay, the next problem. Now we are going to see the next problem. From the following data for forecast the cash position at the end of April, May and June 2017. Here February, March, April, May, June, totally 5 months are given here. Here sales, purchases, wages, sales expenses was given. In the month of February, sales is 1,20,000, purchases 80,000, wages 10,000, then selling expenses 7,000. In the month of March, sales 1,30,000, purchases 98,000, wages 12,000, selling expenses 9,000. In the month of April, sales 70,000, purchases 1 lakh, wages 8,000, selling expenses 5,000. The month of May, sales 1,16,000, purchases 1,03,000, wages 10,000, sales expenses 10,000. The month of June, sales 85,000, purchases 80,000, wages 8,000, and last one is selling expenses rupees 6,000. Okay, these are the informations given for the preparation of cash budget. Here further information like sales at 10% realized in the month of sales, balance equally realized in 2 subsequent months. That is 10% realized in the month of sales, balance equally realized in 2 subsequent installments, subsequent month. Then purchases, creditors are allowed. Purchases, creditors are allowed in the month following the month of supply. Following the month of supply. Then wages, 20% paid in arrears. 20% paid in arrear in the following month. Then sundry expenses paid in the month itself. Sundry expenses paid in the month itself. Income tax rupees 9. Income tax rupees 20,000 payable in June. Income tax 20,000 payable in June. Then dividend 12,000 payable in June, the month of June. Income from investment 2,000 received offerly. Then interest from investment 2,000 received halfly in March and September. Cash on hand, cash balance on hand 1st April 2017, rupees 40,000. Okay, so from that information we have to find out the cash budget. We have to prepare the cash budget April, May and June, in the month of April, May, June 2017. So here sales additional information was given, sales at 10% realized in the month of sales, balance equally realized in two subsequent years. So 10% realized in the month of sales, in the sense here 1,20,000 is the sales. So 10%, 1,20,000 into, you have to calculate that 1,20,000 into 10%. Okay, that is considered as cash sales. And the balance is paid in the two subsequent months, in the sense March, April, May. So remaining amount is paid only in the month of April. Okay, in March, in the sense that should be paid in the month of subsequent 2 months. Similarly, we have to calculate all other things. Then creditors are paid in the month of following the month of supply. So following the month of supply, next month. Okay. Before doing the problem, just we can do the working notes. Here out of total sales, 10% are cash sales. Balance 90% are credit sales. If any given month, 50% of credit sales of the previous 2 months are collected. So the total sales, 1,20,000, total sales rupees 1,20,000. Total sales will be 1,20,000 in the month of February, the month of March 1,30,000, April 70,000, May 1,16,000, June 85,000. Then cash sales at 10%. Cash sales at 10%. So 1,20,000 into 12%, 10%, 12,000. 1,30,000 into 10%, 12,000. Then 70,000 into 10%, 7,000. 1,16,000 into 10 by 100, 11,600. 85,000 minus 85,000 minus 8,500. So the net value, the credit sales value is 1,08,000 here. So here credit sales value, total sales 1,20,000, total sales 1,20,000 minus cash sales 12,000. Total sales in the month of February 1,20,000, cash sales 12,000. So credit sales rupees 1,08,000. Okay. Then in the month of March, total sales 1,30,000, cash sales 1,30,000 into 10%, 13,000. So the remaining sales 54,000. Sorry, credit sales 1,17,000. 1,30,000 minus 13,000, 1,17,000 is the credit sales in the month of March. Then total sales in the month of April 70,000. April 70,000, cash sales 10% 7,000. So 70,000 minus 7,000, 63,000. The month of May 1,16,000 minus cash sales 11,600. So credit sales 1,07,400, 4,400. Then in the month of June 85,000, cash sales 8,500. So remaining is considered as 76,500. That is total sales was given. Out of total sales, 10% of sales is considered as cash sales. So total sales minus cash sales, remaining is considered as credit sales. Here credit sales is in the month of February 1,08,000, in the month of March 1,17,000, in the month of April 63,000, May 1,04,400, in the month of June 76,500. Here collection in 1 month after credit sales. So here total sales in the month of February 1,08,000. So the amount collected in first month after sales and remaining in second month after credit sales. So in first month they have to pay a 50%. So 1,80,000, 8,000 into 50%, that is half of the month, 54,000. So out of 1,08,000, 54,000 which is collected in the month of March, another 54,000 which is collected in the month of April. Okay. So 1,08,000 is the total credit sales in the month of February. So the total credit sales 1,08,000. So 50% of credit sales which is paid in the month of March, and remaining 50% was paid in the month of April. So 1,08,000 into 50%, 54,000. So 54,000 paid in the month of, collected in the month of March, and remaining 54,000 which is collected in the month of April. Then again next 1,17,000. 1,17,000 by to 50%. 50% like 58,500 which is collected in the month of April. Then another 58,500 which is collected in the month of May. Is it clear? So 1,17,000 is the total credit sales in the month of March. 50% of 1,17,000 is 58,500. 58,500 which is collected in the month of April, and another 58,500 which is collected in the month of May. Then 63,000 is the credit sales in the month of April, which is 50% of 63,000, 31,500. So 31,500 which is collected in the month of May, and remaining 31,500 which is collected in the month of June. Okay. So the totally 63,000 in the month of April, 50% of 63,000, 31,500. So 31,500 which is collected in the month of May, and remaining 31,500 which is collected in the month of June. Then next one is 1,04,400. In the month of May, credit sales is 1,04,400. So 1,04,400 out of 1,04,500, 50% of 1,04,400 which is collected in the month of June, that is 52,200. Another 52,200 which is collected in the month of July. Okay. So here this is a procedure for calculation of the credit sales. So credit sales is nothing but total sales was given, 20% is considered as cash sales, remaining is calculated as credit sales. The amount collected in 1 month after credit sales, and the remaining amount is collected in second month. Okay, here February, in the month of February, the total credit sales is 1,08,000. So half of the amount which is collected in the month of March and April. So 1,17,000 in the month of March, which is collected, half of the amount is collected in the month of April and May. Then 63,000 in the month of April, which is collected in the month of May and June. So half of the amount which is collected in the month of May and June. Then 1,04,400 in the month of May, which is collected in the month of June and July. Then 76,500 which is collected in the month of June and July. Okay. So in any given month, 80% of the wages of the same month and 20% of the previous month wages are paid. So income from investment is ignored because it is not received during April to June. Interest from investment is ignored because it is not received during April to June. Okay. Here opening balance of cash in the month of April, 40,000. Then add receipt of cash, cash receipts, cash sales 7,000, cash receipt from debtors 1,12,500. So the total receipt is 40,000 plus 7,000 plus 1,12,500. The total receipt is 1,59,500. So the total receipt in the month of April, 1,59,500. Then next one is payments. Payments, creditors for purchases. We are collected the amount from creditors, amount paid to the creditors, rupees 98,000. Then wages, 6,400. Then outstanding wages, 2,400. Sundry expenses, 5,000. So the total payments, that is 98,000 plus 6,400 plus 2,400 plus 5,000. So the total payment is 1,11,800. Okay, 98,000 plus 6,400 plus 2,400 plus 5,000, 1,11,800. Then now you have to find out the closing cash balance. Closing cash balance is equal to total receipts minus total payments. Here total receipt is 1,59,500. 1,59,500, that is the total receipts. Here total payments 1,11,800. 1,11,800. So 1,59,500 minus 1,11,800 is equal to 47,700. So that is treated as closing balance in the month of April. So 47,700 is the closing balance in the month of April. So this was carried forward in the month of May. That is the opening balance in the month of May, 47,700. So closing balance in the month of April, which is the opening balance in the month of May, 47,700. Then add cash receipts. So cash receipts, cash sales 11,600. So cash sales 11,600. Cash receipt from debtors 90,000. So the total is 47,700 plus 11,600 plus 90,000. The total is 1,49,300. Then amount paid to creditors. Creditors rupees 1 lakh. Then wages. Wages for current period 8,000. Then arrear amount 1,600. Sundry expenses 10,000. Then the total payments for the month of May 1 lakh plus 8,000 plus 1,600 plus 10,000. So the totally 1,19,600. So the total payment in the month of May 1 lakh plus 8,000 plus 1,600 plus 10,000. The totally 1,19,600 is the total payment. Now you have to calculate the closing cash balances. Here total receipts. Total receipt is 1,49,300. So total receipts 1,49,300. Total payment 1,19,600. So 1,19,600. So which will be deducted from 1,49,300 minus 1,19,600, 29,700. So 29,700, which is the closing balance in the month of May. So which is carried forward to the month of June, 29,700. So total cash receipts. Here cash sales 8,500, cash receipt from debtors 83,700. The total receipt is 1,21,900. Then payments, cash payment 1,03,000, wages 6,400. Then 2,000 is the arrear amount. Then 6,000 is the sundry expenses. Income tax 20,000. Then dividend 12,000. So the total payments like 1,03,000 plus 6,400 plus 2,000 plus 6,000 plus 20,000 plus 12,000. So the total payment is 1,49,400. So here the 1,49,400 which is higher than the total receipt. So 1,49,400 is a payment which is higher than the total receipt. So total receipt only 1,21,700. So which is higher than the 21,900. So the difference between these two 27,500. So overdraft facility is also available in the month of June. Okay, so this is 27,500 is the overdraft facility. Okay, so here in the month of June 29,700, add cash receipts. Cash receipts from 1,21,900. Then all payments are 1,49,400. Here 1,49,000 payment is higher than, greater than 1,21,900. So this is treated as overdraft, bank overdraft facility.